We're seeing that even today, early in the tape. We saw a persistent bid to the dollar, despite the fact that it seemed to want to weaken as a reprieve from yesterday's strengthening. How much are you looking at that strengthening of the dollar to continue versus the euro versus perhaps some stasis where we are now?
Yeah, what's so interesting, Lisa, is that you hear this sentiment from the fund manager survey. At the same time, if you look at positioning among leveraged funds, it's really almost balanced. Whereas if you go back to 2015, we had the euro bottom around 103. It was very short, right? So I think about momentum players, some of the, those funds that tend to signal the market bottoms, they are not net short euro. So we think the euro short position and euro downside can run much further here. We do think euro will be below parity within 1 month. And to me, there is an underappreciation or underestimation of just how much euro can go below parity. This, I think, is a really important anchor in investors' minds. They're just thinking that, okay, well, maybe we can get down close to that level, probably not break it because we didn't break it a couple of years ago when the Eurozone was probably in a worse position. But I think there's much more downside for euro ahead.
Erik, just real quick here, is that because of how much more the Fed's going to do than the ECB, or is it because of the existential threat created by the widening spread in Italy bonds versus German bonds?
I think it's both, Lisa. You just highlighted two of the really important points why I think investors will continue to push the euro-dollar pair lower. From a growth perspective, too, the U.S. is in a much better position than the Eurozone. The Eurozone is essentially close to stagnating at this point, whereas the U.S. is still growing at a steady clip. So, again, much more euro downside ahead, in my view.